YouTube family, what's the deal, man? It's your boy and we're back with another video. In today's video, I'm going to go over how do you find your directional bias for the day, okay? Now, let's be real. The reason why a lot of you guys are not winning your setups is because you're most likely going against the trend. Now, a lot of times you may be in a trade where it goes in your favor for a little bit and then you end up losing the trade. Why is that? Because you're counter trending. So understanding the trend and how to find your directional bias is so important when it comes to trading, because the trend is literally your friend, okay? If you go against the trend, you will most likely lose that trade, okay? So do not skip this video, because I promise you guys, once you guys watch this video, you guys will have an idea of how I find the trend and how I figure out what I should be doing in today's session, okay? So before I get into the video, man, I just want to talk to you guys. It's 2024. The year, we're already halfway through the year, and if you are struggling in trading, man, keep at it, because at the end of the day, this is not easy. This is not meant to be easy. This is probably the easiest skill to learn, but the hardest skill to make money in, okay? You can make money, but how consistently can you make that money, okay? So trading is hard, and if you're going through a rough time right now, keep at it. Don't give up, because at the end of the day, the light is at the tunnel. It's literally at the end of the tunnel, and all you need to do is keep figuring out why you are not being successful at trading, and figure out what you need to do better the following day so that you don't make that same mistake over and over again, okay? Trading is all trial and error, and as long as you figure out your error and you fix it, you will get onto the right path to becoming a successful trader, okay? So as I had to say, let's get into the video. I'll see you guys on the next slide. All right, let's get into the actual breakdown of how you could find your directional bias and understand the trend for your trading session, okay? But before I even get into the breakdown and showing you guys how you guys can do that, I want to show you guys something. So if you guys don't know, me and my partner Phil trades. I'll put his link down below. We run Summit Traders, and this is a trading community where we are here to help you become a better trader. We're not here just to call out signals. We want you to be able to take trades on your own, okay? So let's look into the community, and also I want to show you guys an announcement that we have made for the following months that are coming ahead. So first things first, when you join the community, you have one-on-ones. You ever have any questions or ever want to get onto a one-on-one call, you just let me know what day you are available and we can make that happen, okay? Look at the fund certificates that members are getting inside the community. We're passing prop firm accounts, okay, which is a really big thing right now. So if you guys don't have enough capital, go that prop firm route, okay? Payouts, members are getting paid out. I call out signals during London on forex and futures. My partner Phil calls out signals only during New York, so you have both sessions that you could eventually take a trade in with, okay? This is our signal stats for the year. Again, results, you know, it's just a lot of things in here that's going to help you become a better trader. So if you guys want to be a part of a community that actually wants to help each other, the link will be down below, okay? There's a WAP link and there's a Launchpad link. Whichever you're comfortable with, you can sign up through either one, okay? So let's put that to the side now. Let's get into the breakdown. Let's get into what you guys been waiting for. And this is probably going to help out a lot of traders, because when I started trading, the hardest thing for me was understanding if I should be buying for today or if I should be selling, okay? So I'm gonna go over 2 breakdowns so that you guys can understand how you guys could use this same thought process to figure out what I should be doing for the day, okay? So if you guys see the gray bar, this is my trading session. This is when I get on, which is 2 a.m. Eastern time, okay? So this is when my session starts. So as soon as I get onto my session, let's do a top-down analysis, okay? Let's start on the 4-hour. So what is the 4-hour telling you over here? Very clear as day. You're breaking structure to the upside. Breaking structure, you're breaking structure, you're breaking structure, okay? So what is that telling you? That's telling you that, cool, we're breaking structure to the upside. We're not making any new lows, because you can see these lows are getting respected. And, you know, that's telling you that we're potentially could go for another bull run, right? So once you understand that, you know, a lot of things, or the main reason why traders would not think this is a bullish trend is because, okay, cool, you look at the 4-hour time frame, be like, okay, cool, we are at the top already. Now let's, since we are too high, right, we're gonna come back down here. Now what are you doing wrong there? You're already doing wrong, because now you're basically predicting that, okay, cool, This is going to be the top of the move, and this is going to be where the reversal is going to happen. So let me start looking for sells here. That is the wrong thought process, because now at any given point, yes, you may be going down and then you could potentially push back up, right? So you got to understand that you got to go what price is already showing you and not what you think, because when you start thinking that price is going to go this way, that's when you're already messing up. Okay, so just look at price and see what it's doing. It's breaking structure, breaking these highs, breaking these highs. We're breaking these minor lows, minor highs over here. So cool, we're potentially bullish. Now let's go to the 1 hour time frame. Again, the 1 hour time frame, what is it telling you? Boom, breaking structure. We're breaking these highs over here. Okay, so we took out these highs, major break of structure, minor breaks, minor breaks. We're failing to make new lows as well. So what's that telling you? 1 hour, 4 hour, bullish. Now this is where you could also get mistaken on the 1 hour time frame, because we use the 1 hour time frame more than the 4 hour because we're scalping on the 5 and 3 minute time frame. But let's say you look at the 1 hour time frame here. Okay, couple of things that you're gonna do. You're gonna be like, okay, cool, we have a resistance here because we failed to break out of here. So since we're rejecting multiple times, we could potentially start looking for sells to come down. Now at any given point, okay, we could come down like this, and then boom, we break up like that. Okay, because whenever a move happens, you're gonna have a retracement, but you don't want to catch that retracement. You want to catch that move going in your favor. Okay, so if you think you're too high here, okay, which a lot of times I get caught in that, sometimes I'd be like, we're too low or we're too high, tell yourself that you're just predicting it, and you do not want to do that. You want to see what price is doing already and just go with the flow. Okay, go with the trend. So don't ever predict that you're too high or too low, because at the end of the day, those predictions could really just cause you to lose over and over again, because then now you're just like, okay, cool, if I took a sell right here and I lost, let me try to look for another sell because I know it wants to come down. I know it wants to come down. How do you know it wants to come down when price is telling you that we're fully breaking to the upside? Okay, so then let's go to the 5 minute. Once we figure out what the 1 hour and the 4 hours do, let's go to the 5 minute. Now look at the 5 minute here. Okay, this is a range, and this is what you have to get better at seeing in the market. This is a range on the 5 minute time frame. Do you want to take a demand or supply in this area? No, you want to wait for the breakout. Okay, so if we get a breakout up to here and then we have our demand forming somewhere up here, cool, I would love to take that, but at this point you have to wait and see what price wants to do. Okay, so let's play this out. Okay, boom. So look what just happened here. We had a closure outside the range. So what's that telling you? That's telling you that, okay, cool, we're breaking to the downside, let's look for sells. Now where did you go wrong? You see that close out, that outside the range. Now you're thinking of sells. Why are you thinking of sells? Because you see what's happening here and you think, okay, cool, I'm going to sell because we're fully breaking to the downside. That is where you will get caught in the fake out, because most of the time on the higher time frame, on what's happening on the 5 minute time frame, these could just be a retracement on the 1 hour time frame to then cause a move to go to the upside. Okay, so instead of you looking for sells here, you already have your buys for the day, which is buys, correct? So now let's zoom out. Let's see where price could bounce from. So we look over here, we have a 5 minute demand sitting right here. That's a 5 minute demand, and this is a nice 5 minute demand because why? We have aggressive buying. We have aggressive buying over here with the break of structure. We're breaking structure. We actually close body above, and we also have 4 consecutive bullish candles which caused the break of structure, and it's also a gap being left behind. So if y'all don't know how I trade supply and demand, go watch my other videos. I literally show you guys how I find the zones and what I look for when it gets to the zone. Okay, so also there's a gap here. You look, there's a gap right here and right here. So in order for the zone to get tapped, you have to fill in the gap and then see what price does at the zone. Okay, so instead of you looking for sells here, even though sells could still play out because you're trying to take it down here, you don't want to look for that because that's not your overall move for the session. Okay, so let's play this out. Okay, boom. So look what just happened. We just filled in the gap. Okay, now if you guys know, this is on the 5 minutes, so as soon as my 5 minute gets tapped, I want to wait for that first break of candle to get from my entry. Okay, so boom, right there, that's where I'm entering. Now keep in mind, okay, this zone is really big. You don't want to have your stops below this 5-minute zone because it's such a big zone. There's two things that you could do. You could either measure out this 5-minute zone, okay, and then now find where the middle is at. So this is the middle. Boom. You can put your stops in the middle, okay, or you can put your stops below the swing, but I'll be more comfortable putting it in the middle of the zone to give me more breathing room. And then from there you could go for your 1-to-1. So let's play this out. Boom, your 1-to-1 was hit. Let's see if it goes for more. Let's see if it goes for a 1-to-2. 1-to-2 is up there. I don't think that would go for 1-to-2, but it went for about a 1.5. Okay, and all you need is a 1-to-1 because this is a big move on gold. And if you were to put your stops below the swing, you could have gotten a 1-to-2 easily, more than a 1-to-2. Okay, so this is the move that you want to catch, and it will give you more confidence in taking this setup because you're going with the trend. You can either take sells over here, and then what's going to happen is you're going to be doubting yourself because you understand that the higher time frame is already bullish, but you're still trying to take sells just because you see we're breaking structure to the downside. Okay, so keep that in mind. Understand your trend. Once you understand your trend, stick to only one bias for that session. Okay, so that was my first example on gold. Let's go over to NQ. So let's look at NQ. Let's replay this from, start from here. Okay, cool. So this is New York session. Okay, so what are you seeing on NQ right now? Let's do a top-down analysis. Let's go to the 4-hour. Okay, what is the 4-hour telling you? Just clear as day. What is the 4-hour telling you? 4 hours telling you that you're breaking structure to the downside. You broke these lows, breaking these lows. You could potentially break these lows too. Okay, you're not making any new highs. This was a high you had up here, another high, another high, another one, another one. So you're making bearish structure to the downside. So what is that telling you? That's telling you that, okay, cool, I should only be looking for sells. Okay, now a lot of you guys are gonna look at the 4-hour and be like, okay, cool, so we are at a support. Now why are you confident that this support's gonna hold when structure is overall telling you that you're breaking to the downside? Any given point, what can happen here is you could get a breakdown like this. Okay, so go with your trend and see what price is doing. Don't worry about the support levels because you got to understand that your trend, the market structure of what price is showing you, is way more important than the support and resistance level. Okay, so on the 4-hour, let's clear this out. You understand that we're breaking structure to the downside. We're not making any new highs. Cool, we could be potentially bearish. Let's go to the 1-hour time frame. What is the 1-hour time frame telling you? Clear as day. You just took out all of these lows over here, breaking structure to the downside. You're breaking more structure down here, and then potentially you could break these lows too. So 4-hour clear as day telling you you're bearish. You can see you had such a big move to the upside over here, and then now you basically have a whole correction move coming. So bearish. Okay, so the 4-hour and the 1-hour is telling you that you are bearish. It's really that simple on the higher time frame. You just gotta see what price is doing and what structure is being formed. Once you figure it out, let's go to the 5-minute. So on the 5-minute, clear as day, you see this big drop right here. Okay, what happened when price dropped? You took out these lows. So boom, yes, this looked like a liquidity grab. It would have played out if you took buys, but again, what is your overall structure for the day? The overall structure is you are still bearish. Okay, nothing is telling you that you should be buying at this current moment. Okay, so if you guys know, a wick is a break of structure for me, so this is, I'll consider this a break of structure. And you also have a supply up here. So if you look over here, let's see, this is a supply sitting right here. This is your 5-minute supply. Okay, now would you want to take demand to the upside? No. Why? Because at the end of the day, price doesn't have to keep going up. It could stop right here and push all the way down because we're still overall bearish. Okay, these could be a lot of manipulations where price could eventually just try to get you in for buys and then stop you out. So let's play this out. Boom, what just happened here? If you guys know how liquidity works when we trade at these zones, we tap into our 5-minute supply. Okay, Now a lot of you guys would see that we're going up, so what are you guys gonna do before we tap? Let's just replay this. You guys are gonna try to take a demand. Okay, y'all will see gaps. This would be a demand. You'll wait to take this demand, right? Oh, this was the demand that formed right here, because this was the one with the clean breaker structure. Okay, and this one would have played out, but look what happened afterwards, right? It started coming to the downside. So instead of you trying to take a demand to a supply, just wait for your supply, because anything can happen here. So let's play it out again. Boom. So if you took this demand right here, over here, and you try to go for a 1-to-1, or you try to go for your supply zone, you would have got stopped out. Unless you put your stops below the swing, you would have got stopped out. But since this is a small zone on the 5, we usually put it above. I don't even... Oh, it hit your 1-to-1, so that was good. But again, oh, actually, no, it stops would be below the zone. It would have missed your 1-to-1 by almost a tick, and then it would have came the other way. Now, you could have secured profits, but again, this is not what you want to trade, because then you're not confident in holding this setup, okay? So that demand, after it did that, it came all the way down, stopped you out, and then it came all the way back up. Now, as it comes back up and tap your actual area of interest, which is this 5-minute supply, look what happened. You tapped it, and then you wicked it. So this is a liquidity gap that we take every single time if we see this happen, okay? As long as it doesn't close above the zone, it leaves a wick. We take that first break, which is right here. Now your stops will have to be above the zone, just because, you know, it's, you know, this is a liquidity setup, and then you could go for a 1-to-1. So let's go for a 1-to-1, and boom. So you guys see why it's so important to go with your trend, because at any given point, these demands will basically lose, because you're not going against a trend. This whole move right here, it's just a retracement on the higher time frame, so it can continue to push the way it wants to push. Okay, now even if you didn't take this liquidity setup, just look at what happened after that form. You have a supply right here. This is a clean supply. Okay, so liquidity grab, you have a 5-minute supply here. Now you have more confidence in taking this setup, so another 5-minute supply here. Boom, price came back, wait for that break. Boom, that break was right there. Your stops could have been above here or above the zone, either one, and then go for your 1-to-1, which is down here, and boom, clear as day. So it's so important that you guys understand what the higher time frame is doing, and also never predict that you're either too high or too low, because at that point you're just telling the market that you know what it wants to do now, and that it's going to reverse and go in your favor, which 90% of the time is not going to happen like that. So again, I hope this video helped you guys out on understanding your directional bias and sticking to going with the trend, because I promise you guys, when you guys start going with the trend, your trades will play out more often than you are doing it without going with the trend. Okay, so go with the trend, because I promise you guys, at the end of the day, that will give you a higher chance of winning every single setup that you take. Okay, so that's all I have for this video. I'll see you guys in the next video. All right, peace.